what we can see here is actually something very obvious. So what are we seeing here? We got a change of character bar. So throughout the indices, so maybe apart from Nasdaq, so definitely in the S&P, and we got the Russell and also Dow Jones. So this is the change of character bar. This is the largest bearish bar that we have ever seen, at least from this uptrend, the immediate uptrend, up wave. So you can see that is very significant. Is very bearish, and in terms of the spread, which is from the high to the low, is just huge. For example, for the Russell 2000, I think the spread is almost like 5% intraday. So we definitely never encountered that within this trading range. I would say in this year. So we are close to probably at the end of the year, and just in this year, this is the largest bearish bar that we have ever seen. And similarly, I think we get that in the S&P. If not the largest, then probably must be easily the top three in terms of the bearish spread, and probably in Dow Jones as well. So I think this is probably the largest bearish bar that we have ever seen. So now we get the change of character bar, the largest bearish bar, and look at the volume. So we got a lot of the supply. And one thing that is very interesting is on that day, the Black Friday is actually a short session because the market actually closed at about 2 a.m. The Singapore time zone here instead of the 5 a.m. So even with that, we still see a ton of the volume, a lot of the supply. Look at this, especially the Russell and also the Dow. So there are a ton of the supply involved, and certainly in the S&P, we got a spike of the supply, probably the largest since this uptrend. So yeah, this is the largest. But for Nasdaq, it's a bit better because the supply is just not as threatening, and also together with the spread. So I think Nasdaq is the most resilient. And for the context wise, we definitely need to look at it. So for S&P 500, let me just zoom in. So this is S&P 500. You can see that I talk about potential vulnerability here because of the channel overbought. So we got an overbought situation throughout. But not only that, this is a climatic run up. So this is right after a climatic run up and hit the channel overbought, and followed by this is a very shallow pullback, like a change of character. If you really like to label that, that is a change of character out from this wave. But this is certainly not threatening just by judging of this character and also the magnitude of the pullback, and look at the supply. It's not very threatening yet. So there's no continuation to the downside. That's why there's another attempt. But last week I talked about this hidden uptrust. So why is it hidden uptrust? Because that is it's not really committing to the upside. So we can see that this is just one bar alone. Like intraday, there is some form of the commitment, but it just did not really stay above. So I just call it a hidden uptrust. But anyway, it's just an uptrust in a lower time frame, and that is on last week. So I believe that's 19. So last Sunday I talked about this bar, and that is a uptrust situation. I think that at that time I mentioned we probably will see that there is a reaction coming down to test at least the low right there. So next day on Monday, I think this is the clue, or this is the evidence. So finally we get a very significant uptrust bar, or the hidden uptrust bar, with even increasing of the supply. So if you think like the bar on Friday here, like call it a uptrust, is not very significant. I will agree. It's probably going to stay there, or if we get less supply, then it might just stay there for a while. But this day on Monday is really the evidence that we are looking for. for the bearish case. Got an increasing of the supply, we got an uptrust, and subsequently, these two bars are slightly better because we see that there is attempt to go down, but it just got a demand tail. So still no commitment to the downside. However, if we just switch to the hourly time frame, so let's have a look at this hourly time frame perspective. I think it will be a lot clearer. So if we just look at the hourly time frame, okay, it's still the same. We got the swing high. So this is the last Friday uptrust, or the week before, and this is the Monday uptrust. Okay, so with increasing of the supply, subsequently it just have a reaction. But on these 2 days, we see that market just holding up and holding up again. But during the non-RTH, the Asian European time zone, we see that it's just climbing up and test the supply zone. So there is a supply zone that is crucial that we definitely need to pay attention. So look at this huge bar here, huge bearish bar that comes with, really, I think this is the very impressive of the supply, the last hourly bar, increasing of the supply. If you compare it to the past session, this is certainly stands out a lot, and that certainly form a supply zone. So if we really want to get a bullish case, then we need to see that the price actually can overcome the whole supply zone. So in this case, I think this is not bad for a rally, but certainly it just couldn't commit above. So in fact, it started to drift down on probably in the morning time. So it just have a reaction that's on the Friday, I think. So that is really a failure here. So there's a failure right there, and you can see that there's an increasing of the supply, even with the Asian European time zone. If we compare it to here, or even here, or here, or even here, so it's quite significant. And eventually, the US session started on about 10:30 my time zone. So that is immediately a rejection. So if we just look at the structure, the swing low, so that is a very important point. So this is the axis line, a swing low. So once it's broken down during the non-regular trading hours here, and we see that there's an attempt to rally. So it's just like a typical like sign of weakness, sign of weakness. Even though we get a hammer bar, this is a very impressive hammer with a very long demand tail. But look at the subsequent rally. With the increasing of the effort behind, we barely move up, and we did not commit above this axis line. So this is like the previous support. Once it's broken, now it becomes a resistance, quite a textbook style. And look at what happened on the opening bar. It's a straight rejection bar, and a ton of volume, a ton of the supply. So there's no doubt, and eventually it just closed at the low right there. So that's triggered by the COVID variants. So that's why we see that there is a panic sell during the non-RTH. So this whole picture is actually quite bearish. Consider that, let me see, that's the market actually closed at 2 a.m. So usually it's like close at about 4 or 5 a.m. So it just closed at 2, so I think about three hours earlier, and we still get a ton of the volume. And thinking about that, probably there are a lot of the US traders are not working on that day, and they will need to probably catch up on Monday. So I believe that, and I also wouldn't be surprised if we see a lot of the selling continue on Monday because of the strong momentum on this bar, increasing of the supply, while a lot of the US traders are not working, not trading, because they are still celebrating, they're still on holiday. So with the daily chart here, it doesn't look that scary. Why is that? First, it's still a very straight uptrend, and we got a quite a reaction right there. But apart from that, we still a higher high, higher lows throughout. So if you think that this is just a normal pullback within a very prolonged uptrend, you could be right. And just by looking at the chart, it certainly is this way. At least it's just like a normal pullback. We haven't really seen a lot of the bearish results apart from probably this bar and a few bars within the uptrust bar. So with this context, I think it certainly makes a lot of sense to probably expect a pullback to test the axis line. This is where the resistance becomes the support, so the axis line or the axis area. So this is the support area that we can expect it to get tested and to see if we get some sort of the bounce of that support. So I think this is quite a normal situation. So just by looking at the chart, so I will just think this way because in terms of the supply, certainly is increasing, but is not hitting a ton of the supply like we see here or even here. It's just slight increase, maybe on par with this view, but certainly is not yet threatening. So just by looking at the chart is quite okay, quite normal. It's just like a simple normal pullback right after an extensive run up. Okay, so I'll talk more about what I think, why I changed it to slightly bearish view, and jump back to the other index. Okay, let's talk about Dow. So for the Dow Jones, this is a very impressive or nice run up, followed by a potential reaccumulation, especially when I see this Sun Strength rally, followed by very mild backup. Look at the price action or look at the characteristics of the price. We see that there is a small spread, very low volatility, and come back to test this axis line or the axis area. So everything looks nice and well and bullish until we get the Friday bar. So this is like a capitulation bar. Suddenly this breaks everything. So we got a commitment below this support area. So we just break this. And despite the previous reaction is just very mild and like a kind of grinding down action, but Friday actually ruins everything. So we got a spike of the supply, we got a commitment to the downside, break back inside the range. So that could change it to maybe could this be an uptrust after distribution? So this is still a question, but certainly in terms of the structure, is just doesn't look good at all, especially when it commit below. So if we really get some bearish case or some form of the correction, I don't really want to talk about whether this is a distribution. I just want to talk about maybe we still haven't yet reached the time for the Sun Strength rally backing out and then continue to go up. So we might spend some more time within the big trading range. So this is the big trading range. And I think it makes quite a lot of sense to go back and test a low. So look at this. Now it's about 35. If we come back down to test 34, 33, it's still about 1 to 2,000 at least. So I think if the momentum carries on, quite likely that we can expect this sort of situation. Okay, so in terms of the overall structure, it certainly violate the Sun Strength rally together with the backup action. So this is bearish. So at least short-term bearish. And let's look at Russell. So if you look at Russell, for Russell, it has been consolidated for maybe close to a year. And finally, we see that there is a breakout and everything looks very bullish, especially with a lot of the absorption. Even this with the increasing of the supply, we still see that there's absorption going on. So this is very powerful. And that's why we got a very strong rally up out from this triangle, the apex formation. And while it's just pulling back, Last week I talked about maybe we can consider a potential trade if we can see some form of the reversal once it get tested, the access line or the support area, and also this breakout bar. Okay, so I think that could provide some opportunity if we get a bar like this, big bullish bar, and then probably it can start to go up from there. However, what we get here instead is a big bearish capitulation bar with a spike of this high supply level, even with a shorter trading session on last Friday. So if you look at the spread, certainly I think this is the largest spread across this trading range. So in terms of the supply, I think this is the highest, right? So yeah, maybe it's similar to this or slightly higher. So definitely there's a ton of the supply involved. So in terms of the structure, this is kind of like a failure. So we got a sign of strong rally. Initially thought about a backing up process, but it turns out to become a failure, right? So certainly is bearish. And lastly, Nasdaq is the one that is still very resilient, despite that is overbought here, another overbought. We got some like the uptrust here. So this is also uptrust, but still on Friday is not breaking down the swing low, and supply is not excessively high. It's high, but it's not the highest that we have ever seen. So this is still probably the strongest among all the four major indices. But if you look at the market breadth, like the number of the stocks that's still above probably MA50 or MA1 150 is getting quite nasty. And the new high versus new low, the 52 weeks high versus 52 weeks low is getting a lot worse as well. So in terms of the market breadth, Nasdaq is actually not very impressive. So there are still a few big stocks, probably like Nvidia or AMD or the semicon industry, still supporting the Nasdaq. Okay, so overall, in terms of the chart, the volume, the price action is certainly short term is bearish. But what really worries me is